President Trump warns of an economic slowdown unless the Fed cuts rates. The US President also repeated threats to fire Fed Chair Jerome Powell as he goads the central bank into quickly cutting rates. Josh Farber is head of European credit strategy at BNP Paribas. Josh, is Mr. Trump right that the Fed needs to cut interest rates to avoid a slowdown or even a recession?
Well, our economists see the Fed in a bind with stagflationary pressures. And what we think for the credit markets that means is we need to start pricing some recession risk. Some assets in credit price recession and some don't.
Now, what does this all mean for fixed income markets? We've seen long-dated Treasury yields did rise, but we also saw that Eurozone bond yields were a bit steadier today. So could this be a positive for the fixed income markets?
We think that this divergence between the major economies is important, both for rates, but also for credit. The ECB clearly has more scope to cut, and we think will continue to do so. And we think that's going to help support the outperformance of European credit versus dollar credit.
Well, let's look a bit more closely at European credit. Why do you believe European credit markets will benefit from sort of an uncertain picture in the US?
Well, markets overall clearly cannot escape a downturn in the US, but we think that Europe is better supported in credit, both because recession risk is smaller here, but also we have fiscal stimulus coming later in the year.
And in terms of which credit markets we should be focused on, what would you say?
We think that it's all about high quality credit. So credit markets have thrown the baby out with the bathwater, and we think that there is scope to add risk in non-cyclical and senior credit, and you want to be selling cyclical credit and low-rated credit.
And why is that? Why not look at more high-yielding bonds instead?
Well, within high yields, we like double B. It's underperformed. But the lower rated credits like single B and triple C, they run a number of risks that are very exposed to recession and to growth slowdown, and we don't think those risks are priced.
And that was Josh Farber from BNP Paribas. And don't forget, you can get more videos on Reuters.com.